Dubai's real estate is buzzing, it's trending, and it's already creating ripples all over the world. Well, it's not me, it's the facts out there. With almost 180,000 worth of real estate transaction within this year itself, we've shown almost a 30% increase versus the last 2024. My name is Cleon Barreto and I'm here today to help you to discover some of the hidden gems in this entire whole chaos. The whole purpose of this video today is basically I want to cover up some of the most important things happening around the location, where all the government is investing, what is the kind of infrastructure that we're looking today and for the years to come by, because all these things are very important in decision making. And of course, amongst the chaos, what you really need is good guidance, and that is why I'm here to kind of give you a few options, especially these hidden gems, especially in the price range of $1 million, that will really help you in terms of your investments. What I've basically done is I've pulled in this entire whole graph which shows you the number of people who have moved into Dubai over the last 10 to 15 years. And in my observations, I really want to highlight the last 2 years, let us say even the year of 2023. We've seen a significant increase over population. And why is this happening? It's basically happening because of good governance, safety, no taxes, good business regulations. And this is one of the key factors what defines or sets Dubai versus the other countries. In fact, in this year itself, we've already hit the 4 million mark in terms of population, which has been over 5.46%. Now, what happens is when you see the number of people moving in, we also need to understand that real estate would be required. So, in short, what we need to basically understand is the absorption rate of the number of people moving into Dubai versus the number of houses that would be required. So I've been sitting with this Indian couple just a few days back and we were discussing properties, and they were also very curious to know on who are the buyers, because as a client, one would always want to understand who are the buyers, where do they come from. So I was also doing a little bit of research, and what I've done is I pulled in this property buyers graph that basically is quite informative, and it's quite phenomenal when we talk about the numbers. So this is basically the year of 2024, and since we've already completed almost 10 months for 2025, I'm just looking at a 10-month comparison. So if you really look at the numbers, from the age group of 31 to 50, almost 70% of the entire whole real estate transactions are happening within this group. Now, when we look at the subsequent year, which is 2025, ideally, we've not even finished the entire whole year, and we are still looking at almost 70% of the entire whole transactions for this year as well. So we're looking at a lot of business class, a lot of expats, a lot of aspirational buyers looking at buying in properties within this year itself. A lot of people who have been, renting properties over the last 10 to 12 years have now been moving to the part of owning properties. In fact, the first time homebuyers scheme has right now given a boost to a lot of people, in fact, in Dubai. And that is why you see an increased number of transactions happening within these age groups. I've compiled a little bit of data to also understand the kind of properties that have been purchased in the last 2 years, and understanding also the kind of investors and what price range they're investing. Now, if you talk about 2024, almost 52% of the investors are under the bracket of under a 2 million. Now, when we look at about 2025, we still have almost 3 months to be completed, and we're again looking at almost about 60%, which is extremely important. And in fact, now when we look at the mortgage rates as well, they have been phenomenal versus different parts of the world. With majority of the townhouses that are to be launched in the next 3 months, obviously we would also see an increase of this segment. So we're talking about villas and townhouses, that is again between the price range of 2 million and above. So as I said in my first half of the video, that I'm going to give you 5 different opportunities, and these are hidden gems. We are talking about inventory which is ready and near to ready, which means this gives you an opportunity to capitalize on your investments. Locations. So what I've done is I've picked up locations which are prominent and upcoming. We're talking about Dubai Silicon Oasis, Warsan 4, Dubai Land Residential Complex, Majan. I know there are a lot of mixed reactions when it comes to JVC, but let me consider JVC as well, because it's always good to micro-analyze opportunities. And then you have Dubai South. So again, these are locations that I have personally picked, and that is going to give you enough of an opportunity to kind of capitalize on your investments. Price bracket, we are talking about a price range Maybe we're looking at under $1 million for one beds, going up to about 1.3 for a 2-bed. Payment plan, very, very exciting. We're talking about a 20-80 payment plan, which is 20% during construction, 80% on handover, which is as simple as mortgageable. Developer inventory. So all these locations that I picked up, the stock that I'm going to give you is basically a direct developer stock. This is not a resale stock, which means you're not looking at any opportunities here which are more than 5 to 6 years old or even brand new. So in simple, this is brand new inventory that you can target within a month or two, or within 5 to 6 months, or let us say even 8 to 10 months. And last but not the least is the ROI factor. Now, ROI factor is quite subjective. It's very important to know what is the kind of rents within the same location, what is the kind of infrastructure that is coming up. So on that basis, we can derive to the ROI. So I've done a few calculations which I'm going to share with you. So my whole point in picking up locations is very important. Why? Because what we really need to do is we need to understand where the government's vision is, where the government is investing, what's happening around a location. And I think that's very fruitful to any particular investments. For example, if we talk about a metro line, we talk about the expansion of the roadways. I think all of these add more values. I'm not going to take much of your time, but what I've done is, let us assume we're talking about Dubai South today as a location. All people are aware that, the airport's expanding, the old airport is being shifted, but there are a lot of other factors to which why people are investing in Dubai South. So what I've done is, I've created this entire whole sheet, and it basically gives you a lot of important factors on why you should invest again in Dubai South. How will your investment be fruitful? So some of the few investments, as I would rather mention over here, that would really be impacted in a positive manner would be the Port Jebel Ali expansion. We're talking about, again, the Etihad rail coming in, logistics partnerships, metro line expansions. So it's basically a brief description over here and also the impacts. Now, when you have all these things coming in, obviously it opens up different corridors for investments to bloom into that particular location. This is just an example for you to understand, and I can definitely discuss each sheet for different locations without wasting any much more of your time. So we can definitely have a one-on-one consultation to understand all of this. But for the moment, what we could do is we can dive deeper into understanding what are the price analytics, how and what is the payment structure like, what are the rental ROIs like, which I will discuss in my next slide. So some of the key factors again that come into play when you're looking at a property being ready is not the right information that is usually communicated. So what I've done again is I've kind of gone deeper into understanding the technicalities, especially when somebody says your property is getting handed over in the next 3 months or the next 6 months. It's very important to understand the kind of approvals that go prior to that. Why? Because we've already seen a pattern when someone says, okay, the property is being ready in the next 3 months, then it shifts to 6 months or 7 months. So it's always good to have clarity. And that is why what I've done is I've created this entire whole sheet to understand the kind of approvals that would come in before your building completion certificate. For example, your civil defense NOC, DIVA application and NOC, telecommunications like your DO, Etisalat, drainage systems, and your full and final settlement once all these factors are into play. Because until and unless these things are completed, you can proceed to your building completion certificate. And once your building completion certificate is done, that is when you're officially entitled for a mortgage. What happens is when I meet majority of my investors, there's always a dark cloud, there's always a confusion. And I try my level best to kind of give them internal insights. I try to educate them. And when we target something like these, something which is ready or near to ready, there is an opportunity to look at. And I've kind of listed a few benefits. I'm not going to get into deeper detail in explaining all of it, but let me pick up a few points from here. So first one is basically direct pricing. You're looking at direct developer inventory, so you don't have to be pressurized into any resales. You don't have to get into markups. Ready in 6 to 8 months, which means you have an opportunity to get a brand new building or an apartment within the next 6 to 8 months, or something which is already ready. 20-80 payment plan. So as an investor, it's very important to understand what you're shelling out from your pocket. Whether you're an end user or an investor, having a payment plan like a 20-80 obviously reduces your upfront capital. No bank valuation required. So here what happens is sometimes you may end up overpaying for the property, and when you actually go to evaluate the property in a bank, the bank will undervalue it. Why? Because you've paid more for what you really actually bought. I want to just give you a little bit of a rundown on warranty checks. You're talking about immediate income coming in from rentals. Why? Is because when you have something like this, you can either move in immediately if you're an end user, Or maybe if your wish is to kind of generate rental ROIs, then you can just put the property out on rent, which will cover up your EMIs. I've kind of created a very simple working so that you understand typical payment plan like a 20% during construction, 80% on handover. Location, I've just mentioned. This is just for your understanding. What is the total size? What is the handover date? We're looking at next month. Furnishings would be semi-furnished. Cost of the unit, tentatively for a 1-bedroom, would be somewhere around 980K. On the upper range, it could go about approximately $1 million. Now, there is a fantastic offer over here. You're looking at a complete DLD waiver, which means you're not paying any land registration fees. So that's a big plus. Total cost, roughly about 985K. What you pay as a down payment is just 196K. The rest is via mortgage. I've created another working sheet and I can discuss the depths of this sheet in detail. Now, what I've done is I've taken a typical mortgage calculator, keeping a standard rate of interest, which varies up to about 3.95, going up to about 4.1%. The tenure I've taken, the max is basically 25 years. It depends, you can either keep it for 20 years, 25 years. It all depends on how you want to kind of keep your investment for. So it is very important to have an objective, whether it's for rental investment, whether it's for capital appreciation. Based on that, you'll be able to decide if you really want to offset your unit as well. Today, the rents in Dubai have increased. So a lot of people are now moving to owning apartments because this is much more economical. The overall principal with interest for the total tenure, what you actually lose out is about 1.2, but that's the difference from your mortgageable amount. If you ask me what is the rentals at the moment, what you're really looking at is 68K. Imagine in a premature location which does not have a metro, it's still buzzing, it's still upcoming, you still have a very, very good commanding rentals. What you're actually taking in hand after your maintenance would be around 57 odd K. So if you really ask me, is it a good investment? My answer is yes. Why? Because being in a premature location, and when you already know the blue metro line is coming in, which is going to be inaugurated in 2029, this place is really going to see a complete different financials. So this is only for your understanding. This is ideally a working for a 2-bedroom apartment, which is getting handed over in the next 6 months to be precise. So what you're mortgaging is roughly about just over $1 million, 25 years of tenure, your monthly EMI, roughly about 5,600 odd. And this is calculated basically on a typical monthly EMI calculator. And what you're actually making out of your rentals as of today in a location which has no metro is close to about 85K. Now imagine you still have at least another 30% to go up because you still have so many properties within the same location which are currently having rental ROIs of roughly about say 120, 130K. So I've given you a very, very pessimistic working, and this will definitely change. But in short, if you ask me, is this a good investment? The answer is simple. It's a simple yes. Why? Is because the entry point is phenomenal. And as of today, when you're entering in a location which is premature, it still gives you enough of years to cover up for your EMIs. It gives you capital appreciation, and there are a lot of other more factors which I can discuss in detail. It's very important to micro-analyze the right opportunities, and as we've seen in today's presentation, that's one of the ways to, I think, take things forward. For more information, you can get in touch with me on my YouTube channel below. Thank you.